Hello, I'm Vadim Poklopkin. Welcome to the chart of the day. Stock market's subtle yet important change. The world's most famous investor, Warren Buffett, once said, "Most people get interested in stocks when everyone else is. The time to get interested is when no one else is. You can't buy what's popular and do well. Trouble is, popular is exactly what most people buy." The urge to buy is especially strong when the broad market goes higher. Investors assume a rising tide lifts all boats, and for some time, this strategy may work, until it suddenly doesn't. A change in stock market momentum is one of the reasons why that rising tide stops rising. This chart and quote are from our current August Elite Wave financial forecast. We removed the wave labels to focus on its single message. The stock market rally clearly lost upside momentum as it pushed to the late July highs. This chart includes the daily number of NYSE new 52-week highs minus new 52-week lows. Observe the range of net new highs from last September to January as the Dow rallied to the January 26 peak. There were several thrusts in the number of net new highs above 250 during that advance, with a peak reading of 316 on January 16th. Net new highs then diverged, registering a lower high as the Dow made its final intraday peak of 2616 on January 26. The total number of net new highs during the rally since then has averaged less than it did during the advance to the January top, with a peak reading of only 147 occurring on May 21st. Note that each successive high in the Dow has been attended by a lower high in the peak level of net new highs. In fact, the index's rally to the recent July 26 high was the weakest of them all by this measure. Clearly, something is off with the rally of the February lows. Now, as our August financial forecast cautions, slowing upward momentum does not always lead to a stock market high. However, nearly all stock market highs are accompanied by slowing upward momentum. To use another quote from Warren Buffett, "The dumbest reason in the world to buy a stock is because it's going up." When you look at the broad stock market's internal measures, as we routinely do in our research, you're helping yourself avoid this common mistake.